We're back with the most informative, no fairy dust market analysis of the Portland metro area housing market, the post-COVID edition. I still have a lingering COVID cough. I've been sick for the last couple weeks, has not been enjoyable, but we're going to talk about all things housing market today. We're going to look at numbers through September 2023 for the Portland metro area. We're going to talk about mortgage rates. What's it mean if you're a buyer and seller? What do you need to be looking out for? If you've been watching these, hopefully you found them informative. We're going to go a little bit deeper today, possibly depending on my cough and Krista's lack of cough. So let's start at the most important thing, which is what is going on with home values. Year over year, the average sales price has decreased 2.8% from $617,000 to $599,800. So basically, call it a $17,000 adjustment on the average home. Some areas, values are still going up. Some areas, values have decreased more. When we're looking at the averages, the average buyer and seller's experience. The average buyer is buying a home for less money. The average seller is selling for less money. By the way, that 3% adjustment, it doesn't account for back-end concessions that are being negotiated right now.
Yeah, and if you don't understand what a back-end concession is, that's closing costs, that's repairs, that's 2-1 buy downs, that's everything that we don't see the seller is giving in on, which I know I just had a seller give $20,000, right? And so it looks like the sales price was $540. In actuality, is closer to $520, and that's, people don't see that.
Which is a much larger adjustment than the 3% that we actually see. The median sales price has also declined, $550 to $535. Why is this important? No fairy dust, right? The market is more challenging because today interest rates are at 7.6%, right? That is meaningful, right? When you go from a market of 4-5% interest rates, the availability of financing, that is what creates housing price appreciation. The lack of availability of financing in anything makes it harder for a product to appreciate or to sell, be it a car, be it a home. So the average sales price has slightly declined. Now, let's be real. Like, the market is showing a lot of resiliency based on what's happening because closed sales year over year are down 27.8%, while new listings are only down 20%. So there's this lock-in effect where people have, most people watching this, if you own a home, you probably have a 3, 4, 5% interest rate. And it's hard to trade out of that for almost 8. That is keeping a lot of people in their home. That's keeping a lot of people protecting their equity. And that is the blessing of the market that we're in today, because if we didn't have this lock-in effect, it's very likely we would have seen much more depreciation based on an almost 8% interest rate or a 7+% interest rate that we've averaged all year. Just makes it much more challenging for the average Portland metro area person. We're suburban people, even though we just sold a couple really nice houses last month in Portland. Just makes it harder for us to afford homes. Comments.
So one of the questions, like, we're seeing really good resiliency, right? Right now, you would think that maybe prices would have dropped further. What do you foresee if this continues?
My personal belief is that we're going to have depreciation in the Portland metro area of upwards of 5% in the next 12 months, as long as rates stay at the 7.25% or above range, which seems highly likely. And here's why I think that people's plans often don't change, they just get delayed. And right now, so far this year in Portland, we have had 24,482 homes come to the market. There have been 17,376 pending sales. Today on the market, there's 4,555 listings available in the Portland metro area. Last month, there were 1,809 pending sales. I think of the 5,000, 6,000, 7,000 homes that aren't going to sell this year, because they're not going to sell this year, a percentage of those people are going to put their house back on the market next year at a lower price. I don't think we're going to be putting homes on the market next year at higher prices, because my personal belief, based on all the economic data that I see and forecasting, is that interest rates are going to stay high. And our industry and our mortgage broker peers, they seem to be the only ones talking about how mortgage interest rates are going to decline. And guess what? They were saying they were going to in 2022, and they've been wrong about 2023.
Well, my favorite thing you said is like, why? Why do they have to go down? Right? And you keep commenting on what Jerome Powell said is he's really, really trying to squash the real estate market. How do you do that?
He wants the real estate market to be more affordable by pushing down the number of buyers buying, which ultimately pushes down pricing. Now, if you're a home buyer listening to this, you might be going, oh, well, I should wait to buy. And maybe you should, right? Or maybe the right house is available and you can afford it. And over the long term, a little bit of depreciation potentially, and remember, it depends on what market we're buying in, what area, a little bit of depreciation now might be better than overpaying later as the market starts to accelerate. Because, you know, if we look at the last 26 of 30 years in Portland, we've had housing price appreciation. In 2024, I'll have to say 25 years out of 30, which is still really, really good, right? Statistically, that is still really good. Right now, the average home almost doubles in price in the Portland metro area over the last 30 years, every 12 years. Most people in America stay in a home for at least 10. So if there is a home available for you right now, you know, if there's 4,500 listings on the market and only 1,800 pending sales in the last month, to Krista's point earlier, even on a very affordable $500,000 home, she was able to negotiate a $20,000 buy down. And you can even scratch a deal like that in 2021, because a $500,000 house would sell for $550,000, and you would have to get people a pizza subscription where you send pizza to their house every week, and you name your kid after the seller, and yada yada yada.
Yeah.
Yeah.
So what does this mean for people that want to sell their homes?
So I think if you're thinking about selling, my personal belief, based on what I've been seeing in the market, and I study it feverishly, I do believe that most people's homes, the average person in the Portland metro area, their home will be worth less this time next year because of interest rates. Now, no one has a crystal ball on interest rates, but it seems like they're more likely to go up than come down. And if you're thinking about selling, you should really have a conversation about what is happening in your, you know, the Portland metro area is very large. Real estate values are local. They're neighborhood centered. They're, you know, if I work a lot in Tigard, the Tigard market between 700 and $1 million is really hard. But if you have a real luxury home in Tigard at $1.5 million, and not like an expensive home that's big and a little bit outdated, but a real custom, beautiful home, maybe built by Brentwood, you know, on a nice street like the old Street of Dreams, or down in DeKalb or Burgundy, you're going to sell it very quickly for over $1.5 million, right? So it depends on your neighborhood. It depends on location. But you should be sitting down and actually trying to create a strategy to sell and looking really pragmatically at what's happening in the market. Because, you know, the number one thing sellers always say is when the market's hard is, well, I don't have to sell. And guess what? Buyers don't have to buy. And they don't care if you have to sell or not. And most people selling real estate each and every year do not have to sell. They want to. So you need to have a real pragmatic viewpoint of like, what is the asset that you have? What is happening in your area and neighborhood and location? And go from there. You know, a home that I own in a neighborhood that I live in, Krista just sold an identical floor plan. And in 2021, I probably could have sold my house for 7, 10, you know, above 7 for sure, you know, low 7s. At the end of last year, you know, maybe high 6s. And what did you just help that house trade at?
$655.
And did you get any concessions?
We got some repairs.
Okay.
We didn't ask for concessions.
So irregardless, right? I mean, that is a $50,000 decline. And pragmatically, I have to look at that neighborhood that I lived in as it's a nice neighborhood. It's close to a park. It's close to a school. It's in, King City, which a lot of people have a tendency to ignore. But the build quality of those homes is moderate, right? And they're aging, and they're starting to show their age. And in a marketplace like we're in today, a buyer is going to look at that with a little bit more discretion, most likely. And that's having a negative impact on values. So if you're a seller, going back to your question, you need to have a strategy session with us because, we're good at analyzing the market, I think.
With us is key.
Yeah.
I think, to David's point, a lot of realtors just say, well, I feel this and I feel that, and this is how I feel, or this is what I'm seeing. It's like, well, what are you reading? What are the stats saying? What are the actual numbers showing? And that's a lot different than how you're feeling. And I think that's something that I really take into consideration now when I'm listening to other realtors talk. Because I don't care what you're feeling. I want to know what's actually happening. And I want the, I want the truth. I want the fairy dust. I want the truth. I want what's happening.
And let's be real about feelings. In 2022, Wall Street Journal ranked us as one of the top real estate teams in the state of Oregon. And we're participating in a very small portion of the transactions that are happening, right? More than what the average agent is. But as a percentage, our feelings could be skewed based on what we're doing. And here's the thing too, the house down the street, it might be the same house, but the selling circumstances are not likely to be the same. Because maybe that person came from another state where it was a multiple offer situation and they're getting advised by their agent to act a certain way. Or maybe someone is going through a really hard personal problem or is really trying to hold on to equity and they negotiate a certain way. In the neighborhood we were just talking about, there's 300 plus homes, there's 2 builders, there's 7 or 8 floor plans. You would think the same floor plan would sell for the same price all the time, but they don't, right? Because the circumstances of the sale are meaningful. The way you negotiate is meaningful. So let's talk about new listings, right? In September, 2,113 new listings came to the market. And who cares what the decrease was from last year or the month before? There were 2,713 new listings that were added to the market, where there was already some existing homes on the market. Year to date, we've had 24,482 homes come to the market. And you guys, by any measure, that is a historically low number of homes coming to the market. That is what is helping the market be resilient. Pending sales, we touched on it briefly, 1,809 in the month of September. I presume that October, November, December will be much lower than that $1,800 or that 1,800 mark, maybe 1,500. I think less than 1,000 pending sales in the month of December, because in a high interest rate environment where things are hard, this is going to have a lot of people want to cool off. If you're a would-be buyer, this could be an opportunity for you because there are less buyers in the marketplace. The average realtor will say, well, only the serious ones are. But let's be real. There's also people that are just window shopping during these months. But people do have a tendency to cool their jets when you get into the holiday months. So if you're somebody who's thinking about selling right now, that window of opportunity, right? It's not that it's going to completely close, but it's going to be quieter, and days on market are not your friend in real estate. Closed sales. We don't have a real estate recession when it comes to values, but we do have a real estate recession when it comes to the amount of buyers buying. We went to interest rates. I'm going to give an interest rate example here in a second. Closed sales are down 27.8% from the same time last year. The big thing to think about is we haven't had this few home sales since the Great Recession. So we're at more of a 10-year low. So the blessing We have a low number of new listings coming to the market. That's keeping the market fairly resilient. But if you're a buyer, there's still 4,555 listings on the market today to shop for. So that's actually doesn't seem like an undersupply. But we do, if you're a seller, it's important to know that we haven't had so few people buying homes since the Great Recession. It's been a long time since we've had this few buyers in the marketplace. So let's give a situation, because we did a $600,000 payment situation where someone put 20% down with $6,000 in taxes, and the payment was roughly $4,000 a month, or $48,000 a year for housing. Today we're going to look at what would it look like if you bought an $800,000 home with 20% down. So interest rates today, 7.6%. You purchased an $800,000 house. You put $160,000 down and get a $640,000 mortgage. For the sake of assumptions, we're going to assume insurance is $1,000 a year, $83 a month, and that your taxes are $8,000 a year, 1% of the sales price, which most will be a little bit more expensive. That would give you a payment of $5,295 a month, which is a rather large payment. I called a lender before this call and I said, if someone had zero debt, no car payment, no student loan payments, no nothing, they're going to max out their debt to income ratio. What would someone need to be earning in order to afford this house? And you need to have a household income of about $150,000. Now, you can use Google and look at the Portland metro area in a lot of cities, and most cities in the Portland metro area and the Portland metro area in general, you're not going to see an average income of $150,000. And that is just one reason why the market is becoming a little bit more challenging and why you're starting to see some more downward pressure on price points in the Portland metro area.
Ta-da!
What are your thoughts, Krista?
No, I mean, it's really interesting when you break down the numbers, and you have to remember that buyers don't shop necessarily based on price. They shop on what they can afford. They shop based on that reverse engineered number of what is my monthly payment going to be based on all these factors. So that's one of the big things right now, too, is if you, one of the funny things is that when you have people that were maybe started looking in 2020, too, now they have that, like, what is it? They've got that, they want that champagne lifestyle and that beer budget, because what they could afford back in 2020, they can no longer afford. So what they're looking at has dramatically changed, which has then stalled out people, right? Or they then have to swallow that pill like, oh, wow, like I can literally afford half of what I could, 3 years ago. So.
Yeah. I mean, I've said it for a long time. People buy houses like they buy cars. They don't care about the debt. They care about the monthly payment. Mm-hmm. And your house, based on comparables, right? We were talking about this in 2022, might be worth X. But what about the payment? Is it actually worth the payment? And how many people can afford it? That $800,000 scenario we just went through, someone would be spending $63,000 a year on housing. I mean, to me, I just feel like that is rare air. I don't know a lot of people spending $63,000 a year on housing.
No, so, I mean, what do they say too? Like, what percentage of your income should be your monthly payment, right?
Well, they let you finance a lot higher percentage.
Yeah, I know, but like, what should it be?
I think comfortably for a lot of people, like if I were advising someone, I wouldn't want them to stay out of the housing market because they were spending 30 or 35% on housing.
Yeah.
But man, it certainly wouldn't make your life a lot better if you were spending less than 25% on housing.
No one wants to be house poor. No one wants, unless you don't like to travel or do anything and you just want to sit in your house. Yeah. I mean,
I think I spend less than 10% of my monthly income on housing. Mm-hmm. And it's taken me a long time to get there, refinancing, paying off debt. It hasn't always been that way for me. I had to be in the market as a home buyer and build equity to get to a point where I could afford to be in that financial situation. Because I can tell you when I bought my first house, it certainly wasn't less than 10%. But I think it is. But I think it is today. You know, with all this being said, right? If we have a low level of housing inventory, a low number of listings come to the market, I don't think we're going to see catastrophic declines. But I also am not sure how we can really see appreciation when we have interest rates around 8%. Now, here's the thing about advice and predictions. It's almost impossible, right? Like, things change. Windows of opportunity or challenging markets, those windows can open and shut really quickly. You know, the 2019 market in Portland, we barely saw, I don't even think we saw 2% housing price appreciation. And then we had COVID and everyone thought they were going to go out of business. And all of a sudden we had a housing boom, right? And then in 2022, the market started to shift and everyone thought it was going to be over in 2023, and it's still here, albeit it's even more challenging. If you're a seller or you're a real estate agent, if you're a buyer and you can afford the payment, it's not as challenging. But it is more challenging for buyers as well because of where payments are. But something could happen in the U.S. economy. Something could happen in the world, potentially, that drives interest rates down. I just don't know what that is and can't foresee what that would be.
Well, and that's what we said, right? Like, basically something really, really bad needs to happen, such as a global pandemic, to make rates go down. So what is that next thing? Like, nobody wants something really, really bad to happen.
Yeah.
Right? So it's what's the lesser of two evils. And one of the things I have to think about, like, I bought my very first place in 2006. What happened right around 2006? Right? Oh, and I bought a condo. 2006, everything went down. I bought something for $255 and it got down to probably got valued at $145 at one point. And that was my very first purchase. I was 25 years old. That scared the crap out of me. Well, I held on to it, turned it into a rental. A lot of people during that time were panic selling because, like, oh, why would I hold on to something that has gone down in value? Because you're looking, it's a long-term investment, and you have to remember that it's long-term. And it's the same thing with stock market. People panic and they sell when you just kind of have to hold the reins and hold tight, right? Because what goes up or what goes down must go up, and vice versa. So I am thankful I held on to mine, turned it into a rental, and I sold it last year for a profit and 1031'd it. And guess what? That rental probably is going to go down a little bit, but when I sell it in 10 years, it'll be for a profit also.
It's challenging to find someone who's held real estate for the average length of time someone holds real estate of 10 years where they didn't do really, really well.
Yeah.
Like that is actually a pretty challenging proposition. As long as you're not putting yourself in a situation where if you lose your job, you could lose everything, right? And the good thing about the marketplace we're in today is we still have a record low of foreclosures and distressed product. People have a lot of equity. If they gave some of it up, they'd probably still be okay and be able to move on, to a different point in life. But let's just give like some quick home buyer advice. What do buyers need to know about the market right now, Krista?
Number one thing buyers need to be doing right now is going to their mortgage broker, and they need to be figuring out what they can afford, right? And the number one thing, you figure out what you can afford and what you're comfortable with, because I have buyers coming to me and they're like, oh, well, I just paid this off and paid this off because it'll help me purchase. Well, then they go to their mortgage broker, and that was like the exact opposite of what they should have done, because sometimes that can be counterintuitive, all right? So before you do anything, you talk to us, and we can get you in touch with a mortgage broker, a professional that knows what they're doing to set you up, because it is still so important to go in with that pre-approval and come in competitive, because the houses that are under $500,000, if that's the price point you're looking at, especially if you're a first-time home buyer, I am still seeing multiple offers there, especially when the homes are dialed in, right? So you need to come in competitive and you need to come in ready.
Yeah. Look, I did an Instagram post today where I said if you're a home buyer, you need to know that home ownership still makes all the sense in the world. It's the most common way in America that people build wealth. It also creates security. You don't have to worry about rent increases or someone asking you to move out because they want to sell that property or move someone in. But you have to shop smart and strategically. You have to shop smart and strategically. And in this marketplace, you have the ability to do that. Now, what about sellers, Krista?
Sellers, you have to be realistic and you have to be ready for your home to sit a little bit. All right. It's again, coming into that not panicking situation. Because I know everyone gets a lot of work to get their house on the market, and then just to see it sit is really, really difficult, especially after the last few years where houses were going like that. Even as a realtor, sometimes I have to remind myself it's normal. You need to sit down and you need to do the research. Your realtor, us, needs to sit down and we'll go over what is the average days on market, what are the homes selling, what do we need to be doing, photos and price that first weekend, really, really important, right? I don't know, David, what advice would you give for sellers?
So I think for sellers right now, if you're the average seller in the marketplace, you have to recognize you're no longer in the driver's seat. Mm-hmm. You have to be open to some negotiation. And I think if you're a seller, you also need to recognize that pricing is actually still near all-time highs. And we got a lot of appreciation, upwards of 20+% between 2020 and 2021. And in order to recognize those gains, it might be okay to sell a little bit lower than you would prefer if you really need to move on with your life. If you're not that seller that's going to be there for another 5 to 10 years. I'm not saying sell, take the gains off the table, and go rent. But if you live in Oregon right now and you want to move to another state, and that's going to improve your quality of life, well, it might be okay to take a little bit less. And I do not believe the market will improve in 2023. At the end of 2022, when I was talking about where the market would be today, I think everyone looked at me like I was insane, right? Like I was being so pessimistic. I guess I wasn't pessimistic enough because the market is actually not going to sell as many homes as I thought it was going to sell. So, if you're a seller, we still are at near all-time highs. You still can get a tremendous amount of equity out of your home to move on to that next step of life. But you also have to recognize you're not in the driver's seat that you were, and nobody cares that you don't have to sell your house. That is one of the weakest places sellers negotiate from that I've ever been involved in. Because when you have your house on the market, everybody knows you'd like to sell. Putting your house on the market is a total pain in the ass, right? And telling a seller or a buyer you don't have to sell isn't going to net you an extra $50,000.
No.
So, hey, if you want to get in touch with us, Krista at HillshireRealtyGroup.com, David at HillshireRealtyGroup.com. If you have questions about a specific area, put them in the comments. We'd love to interact with you and break down some areas. And that could be on video. That could be privately. You can email us both at hello@HillshireRealtyGroup.com. And we'll see you next time.
Thanks, everyone.